So, the government just dropped a mountain of new draft tax rules on what's called Legislation Day. And honestly, there's a lot to unpack. It's filled with changes that are going to touch everyone from the self employed to farmers to people with company cars. It can feel like a lot of jargon. But don't you worry. In this explainer, we're going to slice through all of that and show you exactly what it all means for you. Let's dive in. First up, we're going to look at the big picture, HMRC's huge push to go digital. Then we'll zoom right in on the massive change known as making tax digital. After that, we'll get into the pretty controversial shakeup of inheritance tax, cover a few other important system updates you should know about, and we'll finish with a real-world glitch that's actually affecting people right now. Okay, so here's the main thing you need to get your head around first. Pretty much everything we're about to talk about is being driven by one single massive goal. HMRC is going digital. And we're not just talking about having a better website. This is a root and branch transformation of the entire UK tax system. And here is the number that's powering that whole change. By 2030, HMRC wants a full 90% of all its interactions with us, with you, to happen digitally. Right now, they're at 76%, so that is a huge leap. What does it mean? Well, more automation, more self-service, and a whole lot less paper. And you know, this isn't some fuzzy, far-off idea. They have a concrete plan. It really kicks off in 2026 when they'll start automatically filling in parts of your self-assessment tax return. By 2027, inheritance tax is going digital. And by 2028, you can expect way fewer letters in the mail. It's all leading to that big 2030 goal of being a digital-first tax authority. So let's translate that. For you and me, it means new online options to handle our taxes, all centered around a single customer account that's meant to give you a single clear picture of everything. It also means, as we said, less paper. And interestingly, as part of this whole modernization effort, they're also beefing up the reward scheme for people who report serious tax fraud. All right, let's drill down into the biggest piece of this digital puzzle, and honestly, the one that's got everyone talking. Making tax digital for income tax, or MTD. This is a game changer, especially if you're self-employed or a landlord. So what is this thing, really? Well, in a nutshell, MTD is a totally new way of reporting your income to HMRC. The official line is that it's all about reducing errors and closing the tax gap. But for the people it affects, it means a fundamental shift in how you do your books. It all boils down to two main rules. First, you have to keep all your business records digitally using special MTD-compatible software. So, you know, pen and paper ledgers or basic spreadsheets, they won't cut it anymore. And second, you'll use that software to send a summary of your income and expenses to HMRC every single quarter. This basically turns tax reporting from a once-a-year headache into a 4-times-a-year thing. So, the big question, does this apply to you? Well, starting in April 2026, if you're self-employed or a landlord and your combined income from that is over £50,000 a year, then yes, you're in. The good news, for some, is that the government just released a new list of exemptions. People like ministers of religion and Lloyd's underwriters, for example, won't have to follow these new MTD rules. Okay, let's switch gears and talk about another major change, inheritance tax. The government is bringing in some big reforms from April 2026. The official line is that they're designed to make the system fairer and more sustainable. These changes really hit two key tax reliefs hard. And this is the single biggest change right here. It's about agricultural and business property relief. Now, in the past, this relief could wipe out 100% of the tax on an unlimited value of assets. That is changing. From 2026, that 100% relief is going to be capped at the first £1 million of value. Anything above that £1 million mark will now only get 50% relief. This table really lays it all out. You can see that new £1 million cap we just talked about, with the 50% rate kicking in for anything over it. But check out that third row. This also hits shares on the AIM market. The tax relief on those is getting slashed from 100% all the way down to 50%. And to top it off, that new £1 million allowance, it's not going to rise with inflation. It's frozen solid until at least 2029. It is fair to say these changes have not been popular everywhere. They're being described as controversial and, as the source material puts it, have, quote, caused inevitable disappointment to business owners and farming communities. These are groups that have really relied on these tax reliefs for generations to pass their businesses down. All right, moving on from those huge reforms, Legislation Day also had a bunch of smaller, more technical updates. Let's just quickly cover a couple of the ones you should probably know about. First up, this is for anyone with a company car. There's a potential tax hiccup for people who drive plug-in hybrid electric vehicles, or PHEVs. Basically, a new emission standard could accidentally cause a big spike in their company car tax. The good news is, HMRC knows about it and has proposed a fix. They call it an easement to stop that from happening. Next is something you've probably never heard of, PISES. It stands for Private Intermittent Securities and Capital Exchange System. Yeah, it's a mouthful. In simple terms, it's a brand new kind of marketplace that will let people trade shares in private companies from time to time. And HMRC has now released the technical guidance on how all of that is going to be taxed.
And finally, let's bring all this talk of high-level policy right down to earth with a real problem that's happening right now. It's a perfect reminder that even as our tax system gets more digital, things can and do go wrong. This one involves an error with Class 2 national insurance.
And here's the number that has been giving people a major headache. Some self-employed taxpayers have been checking their accounts only to find an incorrect charge for £358.80 for Class 2 national insurance, just appearing out of nowhere when it absolutely shouldn't be there. So, what on earth happened? Well, the glitch is affecting some self-employed people who make over £12,570 in profit. And ironically, it was caused by a reform that was supposed to get rid of the need for them to pay Class 2 NICs in the first place. HMRC says it's on the case and is actively fixing the accounts. So if this has happened to you, keep an eye out for a new tax calculation. It's called an SA 302 to confirm it's been sorted out. So there you have it, a whirlwind tour of the big changes from Legislation Day 2025. We've gone from the grand vision of a totally digital HMRC right down to the nitty-gritty of tax relief caps and system glitches. It all points in one direction, more and more automation. Which kind of leaves us with one big question to think about. As our tax system runs more and more on its own, what does our role as taxpayers become in managing our own money?